Have you ever wondered what Bitcoin is and why it's creating such a stir in the financial world? A question many of us have pondered as we watch the rise of this digital gold. Bitcoin, a revolutionary creation of the digital age, is a type of cryptocurrency, a digital currency that operates independently of a central bank. It's an unprecedented blend of technology, finance, and the internet, and it's shaking up the way we think about money. Bitcoin is unique. It's not tied to a government or a physical commodity. It's decentralized, meaning no single entity controls it. It's global, crossing borders as easily as emails, and it's digital, existing only in the virtual world. This uniqueness is what's driving the growing interest and fascination in Bitcoin, from Wall Street to Main Street. Stay tuned as we delve deeper into the intriguing world of Bitcoin. To understand the impact of Bitcoin, we must first explore its origins. Our story begins in the year 2009. In the midst of a global financial crisis, a white paper titled Bitcoin, a peer-to-peer electronic cash system, was published on the internet by an enigmatic figure or group known only as Satoshi Nakamoto. This paper proposed a new form of digital currency, a decentralized system that would allow transactions to take place directly between users without the need for a central authority or middleman. Nakamoto's idea was revolutionary, but it was just that, an idea. It was not until January 3, 2009 that the first block of Bitcoin, known as the Genesis block, was mined by Nakamoto, marking the birth of Bitcoin. A significant milestone was reached just over a year later, on the 12th of May 2010. An early Bitcoin enthusiast by the name of Laszlo Hanyecz made the first real-world Bitcoin transaction when he bought 2 pizzas for 10,000 Bitcoins. This event is now celebrated annually across the globe as Bitcoin Pizza Day. However, Bitcoin didn't just serve as a novelty for pizza purchases. Its potential as a legitimate form of currency began to surface when it experienced its first major price surge. On February 9, 2011, Bitcoin achieved parity with the US dollar for the first time, a single Bitcoin being worth $1. This was a monumental moment in Bitcoin's history, proving to the world that this digital currency had real, tangible value. From then on, Bitcoin continued its upward trajectory, capturing the attention of investors, governments, and the public alike. Despite facing numerous challenges and criticisms along the way, Bitcoin has managed to weather the storms, evolving from an obscure concept in a white paper to a global phenomenon that is reshaping how we think about money and financial systems. And thus, the era of Bitcoin had begun. Now, let's compare Bitcoin with traditional investing. Is it really a game changer? In the world of finance, Bitcoin has emerged as a fascinating alternative to traditional investing. The key to understanding this lies in the differences between these two approaches to growing your wealth. First, let's talk about volatility. Bitcoin is notorious for its wild price swings, sometimes changing in value by thousands of dollars in a single day. This volatility can offer massive potential for high returns, but it also comes with significant risk. It's a bit like riding a roller coaster without a safety bar. On the other hand, traditional investing such as stocks, bonds, and mutual funds is typically more stable. The prices fluctuate, yes, but not nearly as dramatically as Bitcoin. It's more like a gentle, scenic train ride, where you can reasonably predict the upcoming turns and dips. Next, let's touch on the independence of Bitcoin. As a decentralized digital currency, Bitcoin operates independently of a central bank or government. This independence can be empowering, giving individuals more control over their money. But it also means that Bitcoin is not insured or protected by any institution. Traditional investments, in contrast, are often regulated and insured. They're tied to established financial systems, providing a safety net in case things go wrong. Lastly, we have to consider the potential returns. Bitcoin has been known to produce staggering returns for some investors. We're talking about turning a few $100s into tens of thousands within a few years. Traditional investing, however, usually offers lower but more consistent returns over the long term. It's the tortoise to Bitcoin's hare, steadily accumulating wealth over time. While Bitcoin offers exciting opportunities, it also comes with its own set of challenges. It's important to remember that investing, whether in Bitcoin or traditional assets, should always be approached with care, knowledge, and a well-thought-out strategy. And remember, no investment is ever completely risk-free. Scene script. Interested in investing in Bitcoin? Here's what you need to know. Entering the world of Bitcoin investment might seem like a daunting task, but it's actually quite straightforward once you understand the basics. Let's break it down. First things first, To invest in Bitcoin, you'll need a digital wallet. This wallet is essentially a software application where you can store, send, and receive digital assets. There are several types of digital wallets such as mobile, desktop, hardware, and web. Each has its own pros and cons, so it's crucial to choose one that fits your needs and offers robust security features. Once you have a digital wallet, the next step is to buy Bitcoin. This is typically done through a cryptocurrency exchange. An exchange is a platform that allows users to buy and sell cryptocurrencies using traditional currency or other digital assets. Some well-known exchanges include Coinbase, Binance, and Kraken. It's important to choose an exchange that is reputable and user-friendly. After buying Bitcoin, the next consideration is storage. While exchanges can store your Bitcoin, it's often safer to transfer it to your digital wallet, especially if you plan to hold on to it for a long time. This is because exchanges can be vulnerable to hacking. Remember, the security of your Bitcoin is in your hands, so it's vital to use secure storage methods and keep your private keys confidential. Investing in Bitcoin, like any other investment, requires thorough research and understanding. Bitcoin's price can be volatile, and it's possible to experience substantial gains or losses. Therefore, it's crucial to only invest what you can afford to lose and not let emotions guide your investment decisions. Moreover, keep in mind that while Bitcoin has been highly profitable for some, it's not a guaranteed way to make money. It's always wise to diversify your investment portfolio and not put all your eggs in one basket. Like any investment, Bitcoin requires careful consideration and planning. So if you're ready to take the plunge, arm yourself with knowledge, stay informed about market trends, and most importantly, be patient. After all, successful investing is a marathon, not a sprint. Can Bitcoin replace traditional investing? Let's explore. Bitcoin's potential to disrupt traditional investing is undeniable. Its decentralized nature, free from the control of any government or institution, offers a new approach to finance. It promises transparency, reduced transaction costs, and the ability to make payments anytime, anywhere. But it's not all rosy. Bitcoin also faces significant challenges, such as regulatory uncertainties. Governments around the world are grappling with how to regulate this new form of currency. Market volatility is another concern. The price of Bitcoin can fluctuate wildly, which can be off-putting to many investors. Moreover, the crypto space is still maturing, and many questions about its long-term viability and impact on the global economy remain unanswered. Despite these challenges, Bitcoin continues to make waves in the financial world, suggesting a promising, albeit uncertain, future. Whether Bitcoin will replace traditional investing or not, one thing is for sure. It's definitely rewriting the rules of the financial world.